BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi. Hello everybody, good morning. Bit of a slow morning for me, a slow start to the video. Same with the market, but at the moment in the UK at least anyway, we've got schools are on strike, so kids are off school. Great. So yeah, this is about as early as I could have managed it. They've gone mad this morning. So let's have a think about what we're looking at here. Basically, not a great deal different to what we've been saying for basically a whole week now for commodities, stocks, forex and crypto really, which is generally, I'm imagining everything is going to pan out the same way that I've been saying it's going to be doing for the next, well, for the last week. So just to run that through for those of you who don't know, this is gold, 4 hourly, looks relatively good. We're moving on up, probably going to be moving up towards the 200 exponential. So 1943, so not much further to go before we hit that criteria. And then from there, we basically mosey on back up to probably our previous high, so back above 2000. Commodities are likely to see some upside. I was saying on the Patreon live stream last night that commodity prices are likely to see higher prices anyway because of China putting tariffs on their commodity exports. Obviously, they're a big exporter of commodities, so you're probably going to start to see some commodity prices rise. With that, you should start to see some mining stocks rise. We should also start to see Bitcoin rise through association with that. There's a couple of reasons on a fundamental reason why that might happen. The gold and Bitcoin correlation is relatively high. It's not perfect, but it is relatively high. Bitcoin's obviously pointing up and is quite strong with pump signals on it anyway. You could view Bitcoin as a commodity, I think a lot of people generally do. And also, we want to be thinking about the impact of higher commodity prices across the board for all other sectors. That might mean inflation goes up again. So what we'll start to see is as the commodities rise, markets might price in the inflation prior to the read. I know this is going to sound a bit complicated, similar to how inflation was being priced in 2021. And then when we finally hear that inflation is high, it's a buy the rumor, sell the news event, isn't it really? So I think we're going to see some major upside for obviously commodities, Bitcoin, probably altcoins as well, because we're thinking Ethereum to break this 2000 is going to be bullish for all altcoins, just through association with them. Last night when we were looking at most of the altcoins, some were okay, most of them weren't that good. You stand back and admire most of these charts, you don't get better than Bitcoin and Ethereum at the moment. So, trying to get too clever on an absolute steaming turd might be a poor decision when you've got charts like these that are already in trends with V-shaped recoveries from golden cross retest and all the other stuff. Golden cross retest, here we go, up and away, and another one here on an exponential. So long story short, Bitcoin and Ethereum are good. Altcoins may move through association with that. We've got gold doing its potentially a V-shaped recovery from its golden cross retest. Now, the thing that is going to throw a small spanner in the works, if anything, is the way that the euro is shaping up. Still getting rejected now on this descending trend line. It's still too early to say which way it's going to go. There's your Bollinger Band Center, which so far had held for the most part. Still early days. It's a clean rejection on this on here. But you know how I like to say, and it's not that I like to say, it's just an observation to be made. If we have a symmetrical triangle, which this more or less is, there's your there's your 20 moving average. Basically a symmetrical triangle that we found ourselves within. And you get quite close to the end of the apex, 70 to 75% of the way through. Whichever direction it breaks in, whether it's up or down, it's usually a fake move. So a fake breakout, fake breakdown. And it looks as though we're trying to do a fake breakdown here. It's not actually happened yet, but if it were to happen, I would imagine that this gets picked up at a slightly lower area. And then actually from there goes and does its, what do you call it, a breakout move really. So we have narrowly avoided a 4 hourly short signal, but hanging around in these areas, we're probably going to get one by the end of the day. 200 simple moving average sits down here at 108.2, and we might get our bounce at that point there. So I'm not massively bearish or bullish at this stage right now, but despite breaking down from this symmetrical triangle formation, considering it's towards the end of the apex, I think it's likely to have a fake out, so a fake breakdown and a bounce back up. Even if it goes down further, I'm not looking for this to go to parity at the moment. I would only be talking about, back down to parity if it's back down below 106. Not really seeing it at the moment. And again, with the Fed effectively pausing and the ECB and every other central bank out there continuing to raise rates, we're looking for the euro to gain in value until there's a change in the central bank policies, really. So that's that. That is it. There's nothing more to that, but it's still the American Independence Day holiday now, so I imagine that for the most part the market's going to be sideways and static and boring, and so for Bitcoin that's likely to be the case. I will get bearish on Bitcoin until or unless we break down below 28,500. All of these moving averages here, so starting at the 10, which is basically 30,500, down to the 21 and the 20, which is basically 29,500, give or take, and then down to the 50, which is 28,500, so increments of $1,000 each way. Each one of those is a buy the dip opportunity to try it, at least anyway, for what's I believe is an inevitable push up from this 32 and then into the upper 30s, pushing towards 40, really, at least 38. And that is that. Not much different to what I've been saying on these videos for the last week now. Again, this is when you look at things on a daily time frame. Yeah, you get the bigger moves when you chart on a daily, but it's slower. I'm afraid it's slower. The crack trading charts are irrelevant, really, if you're going to make a video on that. I suppose you can talk about those on Telegram or whatever, but if you're looking for an immediate move, I suppose this is why you ought to learn how to trade yourself. And if you learn by studying dailies and 4 hourlies, you can apply the same information over to the 15 minutes and the 5s. So there's not much more to say about this. Anyway, I've got to get going. It's going to be a busy day for me, as the schools are on strike. Thanks for watching, guys. Wish me luck. I hope you have a good day. Take it easy.